Neha, tell me about the Morgan Stanley Private Equity Solutions Division. It's within Morgan Stanley Investment Management, but private equity is not new to Morgan Stanley. You've been doing it for a while, right?
Yes, the Morgan Stanley Private Equity Solutions business is a multi-manager discretionary private equity investment platform. And since 1999, we have deployed close to $30 billion across 1,000 different investments to private equity and venture capital managers globally. We've done so as a limited partner, where we make a commitment to a blind pool. We've done so as a co-investor when we invest directly into a company, and as a secondary buyer when we acquire an interest in a portfolio, hopefully at a discount, from an investor that needs liquidity before it's naturally available.
But private equity has been the domain for a long time of institutions and endowments, but now it's moved into the domain of individual investors. Can you talk about how Morgan Stanley is navigating this transition?
So we've actually been serving individual investors and financial advisors alongside our institutional clients for our entire 25-year history. But the reality is that the traditional drawdown private equity structure isn't for everyone. We launched the North Haven Private Assets Fund earlier this year, and with that fund, we're making private equity much more accessible. The fund offers institutional quality private equity exposure in a structure with investor-friendly features. So now investors can opt for simplified cash management, periodic liquidity, and efficient 1099 tax reporting, all for a lower investment minimum than a typical drawdown private equity fund.
And you focus on the lower middle market. So why is this area of the market your favorite? Why do you like to play here?
So the North Haven Private Assets Fund invests in co-investments and secondaries sourced from our general partner relationships. And our platform has expansive coverage. Of course, as Morgan Stanley, we know the largest private equity funds in the world, but as you know, our sweet spot is the lower middle market. We can typically invest for lower entry valuations and lower entry debt levels, which means less risk. We also tend to be better aligned with the private equity firms and the company management teams in the lower middle market, where they don't actually make money unless they deliver performance and generate carried interest. This is in contrast to larger players, which are much more motivated by management fee income.
Okay, speaking of management, how do you identify the general partners that you work with?
So it's interesting. One of the benefits of the lower middle market is also that we find more access to liquidity. So that's important to us when we're thinking about general partners. The typical holding period for a private equity asset is 5 to 6 years. After that value creation period, a private equity owner will seek to sell the company to exit its position and generate liquidity. When private equity managers go to sell a lower middle market asset, there are many more buyers that can actually take down that asset and achieve liquidity for investors. Larger cap companies often have to wait for an IPO window to open, and that can take much more time for an exit.
And then finally, 2025, aside from being the year of AI, it also was really the year of private market assets, private equity. A lot of people are doing it. So what makes Morgan Stanley better than the rest out there?
You know, careful investment selection and thorough diligence are essential in private equity investing. And we at Morgan Stanley benefit from having access to the full suite of the firm's resources to help us make better decisions, including investment banking, equity research, capital markets, and ultimately our sister investment businesses. Beyond that, the best private equity firms, they can pick who their partners are. And Morgan Stanley's reputation for excellence across the board positions us as an ideal partner for those private equity firms.
All right, well, thanks for coming on and talking about it.
Thank you so much, Greg.